Hey everyone, this is Ron with Liquidity Cartel. I just wanted to come on here and introduce myself. This will be one of the first videos that we do. We have a Discord, and we just published a book here recently, Liquidity Cartel Doctrine. I want to come on here and give an introduction, give sort of an intro on the purpose why we did this Discord, why I decided after many years to start teaching, and the purpose behind what we're doing here. So when we get started, there's a million people out there teaching you a million different ways to make $1 million trading. You can't flip through Instagram or X or YouTube and not find someone telling you this is your exact setup. This is how you execute the setup. This is the indicator, the magic 3 or 4 letter acronym of why that indicator works, and you should just follow this blindly. Even if it's not blindly, it's rarely anything on the backside to substantiate the real reason why this trade works. I've been at this now for 6 years, actively trading. Been teaching now for about a year. It's the first time I've gone into the open forum of discussing how I trade and why I trade the way I do. I trade with my wife, Killzone Queen. We've been trading together for about 4 years. Kind of a little backstory. I've been teaching in other Discords, been teaching privately. We both trade full-time index futures. I trade just the NQ futures, and my wife trades ES, NQ, some gold and oil. But the purpose of today's video is to speak to you a little bit about how and why the Liquidity Cartel came to be. Every few months or years, you see a new fancy thing that comes around, new indicators. I went through and studied all of Michael Huddleston stuff, ICT, I'm sure many of you have as well. And I do believe that Michael's a brilliant guy. I think he created his own little code for why the market works. And a lot of times there was a subscription to this idea that there's this hidden puppeteer behind the screen with the marketplace. I don't subscribe to that whatsoever. I think the market is actually very simple. I think it is an auction. It functions as an auction. Give a little background to me. I was a physician for 17 years. When I got out of the medical field, I slowly rotated into finance and trading. And one thing I did discover is I looked for that magic grail, the holy grail. I'm a very mathematical, analytical person. I wanted to find if someone can systematically duplicate certain actions, activities, and get certain actions and predictable results, I want to learn that. What I did find is a lot of rabbit holes that became empty, a lot of indicators and promises that in the end statistically didn't pan out. There are a lot that do. Whether you're using Bollinger Bands, Donchian channels, or simple EMAs, if you can find your statistical edge, you can execute that edge without fail, without psychologically or emotionally attaching to trades, win, lose, or draw. You can be successful in trading. This is where I found the difficulty. When I was relying on some system that just showed me an indicator, this is where you get in, this is the magic special entry or exit, I didn't understand the why behind it. And that misunderstanding of the why behind it led to psychological difficulties in execution with real money. So what I subscribe to, and I did a deep dive, and much like a lot of you out there, or some of the new ones that haven't done yet, I did research. I subscribed heavily to the Wyckoff auction theory, did a lot of research into Mark Douglas, Larry Williams' work, very famous traders, and came across some other traders, the turtle traders, Richard Dennis, which I I'm a very big fan of. But what I did see is that the market is nothing more than an auction of buyers and sellers discussing and negotiating price and value in the marketplace. So the market is continuously conducting an auction. This is what Liquidity Cartel is about. The market is based upon liquidity. If there are buyers out there that are willing to pay more than sellers at a certain level, the buyers will overpower the sellers and eventually reprice and then revalue the market and move the other direction. Am I saying there's not outside impetus or events that can change this in the indexes? No. If you've seen recently some of the tweets or some of the stuff we're having on the other side of the planet, you understand fundamentally of how price can move by news. But in general, price moves very well. You'll see people don't trade Mondays, don't trade Tuesday afternoons, don't trade 3:30 to 9:15 or whatever that may be. What we did discover for the last couple of years as we were writing our book is that the market moves very predictably every single day of the week. At least Monday through Friday in the typical trading hours that I trade. When I say that with the asterisk of what I've discovered and what Wyckoff discovered back in 1923, given the significant number of people in the marketplace, buyers and sellers, and a significant amount of volume being exchanged, market is very predictable. That's why we created this. As you see on the screen right here, this was from a trade that we took today, walked through a student. Markets will move until it finds the value no longer supports it moving in that direction. This is what we teach, and this is what we hope to impart upon the people that we help along in our liquidity cartel. As a price, and everyone's heard of volume profile, and everyone says we use volume profile, we use point of control, volume area high, volume area low, VWAP, volume weighted average pricing. That's nothing more than telling you statistically where the market has transacted previously, where the market has transacted a majority of its exchanges. Markets like balance. And if you've been a study of the markets for any period of time, you'll see that very clearly. Next question is, how do I determine when the value is beyond or extended beyond the areas which the market is willing to accept? Well, it gives you clues. Therein is why we developed the liquidity cartel. Part of what it is your job is not to predict where the market will go. And I tell this, and I've taught this now for almost 2 years, and I do this every single morning with our group. You want to develop a narrative idea of where the market may go. Given where the price has been, given where the price has been transacted previously, where may this market go? Now, some call developing a bias. I don't call it developing a bias, because before this market and the bell rings at 9:30 Eastern Standard Time for the New York NASDAQ Open, I have 2 sets of ideations. I have an idea of where that market go up and where that market might go going down. I have an idea of where liquidity pools may sit, because the market leaves very, very easy places where you can find footprints. Previous sessions highs and lows, true day open, 1800, previous daily highs, previous daily lows. Those are areas where all the people participating in this auction have decided that I no longer want to participate in that market should it go above or beyond those levels. Your job is not to predict if it'll hit those levels. Your job is to understand that when it hits those specific levels, what do I do? How did the market react? Herein is where the niche lies. The market will react. Market leaves very specific footprints. Some folks call it order flow. And there's all sorts of order flow tools out there and second level charts. Very valuable, but I find that it's too time consuming and too much on my chart to look at when I can actually look at a chart and let the candles show me where the buyers and sellers are winning and losing battles. I wanted to come on and say that everybody wants to make money in the marketplace. That is the end goal, but I would also argue that that's not the true goal. The true goal is to understand the process of why the market moves. Why does the market move to these certain areas? Why does it go to one liquidity point and push straight through it and keep going? Why does it go to other liquidity points, immediately stop, reverse, have emotional displacement candles showing that institutions no longer willing to participate in the market moving in that direction, they turn around and go the other direction? I'm never going to try to predict that. What I'm going to do is I'm going to try to prepare myself statistically by looking at back studies of thousands of charts and thousands of entries and exits, that statistically when markets hit these certain liquidity points, it leaves a very, very specific footprint on why it goes the other direction. On the same note, when a market hits a liquidity point and the market doesn't leave those specific footprints, why does it continue to move to the next liquidity point? Why do you have these irrational moves, or people call these irrational moves? Or there are certain days where there's no red folders, or it's outside some parameter that they could trade, or it's on the market open. I see that often. Don't trade market open. 9:30 to 10 is a no-go. I will tell you, in our Discord, I only trade the first hour of the market live. I take every execution live, and I'll show you very specifically that the market never leaves questions. I've not seen yet in the last 2 years of data where at the 9:30 to 10 o'clock I can't go back and look at this is exactly the reason why the market auction operated the way it did. There's no time where I can look back and I lose trades. Statistically, you're going to do that. And that's the last leg I'm going to speak about today. I can show you a mechanical edge. I can show you an entry in a marketplace. I can go and back test 1,000 trades. And I can see statistically that my win rate is 72.8%. I know that roughly 27.2% of the time I'll be wrong. I would wager that the ability to take those losses in stride with proper risk management and trade management and not become emotionally attached to a win or loss is what defines a trader that has a long-term success and a high Sharpe ratio that is significantly profitable. The book my wife and I wrote It's an extensive book. It took us a year and a half to write. It's in 3 volumes. Now that book has 1 volume only dedicated to order flow, volume, how the market works, how true auction market theory is applicable to the daily markets on a regular basis. And the other 2 parts are, how do I get my mind, how do I get myself to successfully execute on that while staying emotionally detached from the result? The reason we did a liquidity cartel is exactly that. The entire first volume, when I take students on or I help them out, and that's where I slowly cultured and put together this program, was realizing that people just want the entry and the exit. Show me the entry and exit, I can do the rest. Well, not to be disrespectful or ruffle any feathers, but I promise you, you're wrong. I promise you that maybe you'll get good at it in back testing, maybe in sim or prop accounts, maybe with 1, 2, 3, or 4 micros. But when you start expanding and copying 12 to 14 or 20 accounts, when you start to leverage yourself higher within your risk management protocols, it will become more difficult if psychologically you don't understand the ability to detach from the results and focus on the process. So liquidity cartel, in short, is a system by which I'll teach you how to trade. I will teach you how to look at the marketplace, to look at it as an auction, not that there is some mystical man behind the curtain hunting your stop losses, because it just doesn't occur. There's a conglomerate of folks out there trading value. They want to see that value exists in certain areas, and when value no longer exists in that areas, they are no longer going to continually price that market in that direction. They're simply going to decide that as a buyer, if I'm going up, I no longer want to participate in this auction. I'm no longer willing to pay these prices. Well, there's certain areas that are very well demarked and statistically backtested to see a very high probability that this is an area where this market may reverse and change directions. It leaves a very specific footprint. So the purpose of today was, 1, focus on the process, not the money. You know, within our Discord, and you'll see everywhere in the book, and I teach this every day, I do teach risk management. I'm a firm believer if you don't have any money, you can't participate in the marketplace. And if you don't protect your assets, the ability to stay psychologically disconnected from the results of that process become very challenging. So what I would ask you to do is go take a look at our YouTube, take a look at our channel and webpage. If this is something that looks like it's congruent with your thinking, and if you've been struggling with, hey, I have the best entry, I've got this best entry model, and you'll see guys out there, this is 80, 90%, whatever it may be, move it forward into sim, move it forward into real live money, AMP, futures, if you trade prop firms, great. That's one thing you'll never see. I don't do any prop firm work. We trade props, but I don't do any of the ideations that I'm going to get affiliates. I don't do any of those. It seems like it's not congruent with the ideation that the process should be number 1. If you have any more questions or comments, please leave them down below. You can go to our Discord. You can go to our YouTube channel. I'd like to hear some feedback from you guys. In closing, this is not for everybody. But I will tell you, in the years that I've been teaching, and I teach outside this in other business strategy and structuring, is that the psychological component to committing to a process is the key to long-term success. If you want to go back and watch the short video Mark Douglas did, and it's all over the internet, short 20-minute video on how to be successful as a trader, nearly half plus of it was that commitment to the psychological discipline of the trade. And I believe that the psychological discipline of the trade is understanding exactly how the markets move, understanding that they're not against you, they're not trying to sneak one past you, there's no mystical man trying to hunt your stop losses. It's that you lack the fundamental understanding of how a market auction works. So, that being said, Liquidity Cartel, go check us out, and we'll talk to you soon. Thanks.